February 5th, 2024. We got a measure move up today of essentially the wedge, and that's about where we went to. I thought there were more important magnets up here. You can see it was one, pullback, two, pullback, three, and then we got a breakout above the wedge, so the target was the measured move. I thought there was more important magnets up here, like closing the gaps with the three low and the eight high, and closing, this gap, which we obviously did here. That's why we got such an aggressive sell off on 23. It's because we touched the 9 low, which was a breakout point where this gap was. And I thought the 6 low would be important too, and there'd probably be sellers around there. Since bulls who bought below 6 got trapped and never had a chance to get out around break even, and we started to rally. So I thought we'd probably get here. Something else that I thought was interesting. So whenever you get open gaps, you have to realize that those are trap traders. And when you get two open gaps like we did today, there's a possibility of a big bear trend day. But, it was too steep for me to think that we were going to go all that far down. I thought that we'd probably get some sort of consecutive sell climaxes, which we did. One, pullback, two, pullback, three. But something that I found interesting is that you have to keep in mind, traders will usually buy the 50% pullback of any sort of rally. So yesterday's rally, here to here, and look where the 50% pullback is. It's right here in the middle of this open gap. And you know that there were traders willing to buy the 50% pullback. And if they did that, they see 7 and they think, oh, well, that's not good. And then they're not let out around break even on 8. So you have the trap traders who bought below 3, they're trapped. But I thought it was also really important that you essentially had a second set of trap traders there from that as well. So I thought those were just important details that could have contributed to the strength of the sell-off. Bar one, a bear bar, but not a very strong close. There's a big tail on the bottom. We're probably going to get some sort of bounce. Bears want, essentially, we've had a big bull trend for the most part for the past couple days. So bears want some sort of trend line break, a pullback, and then a lower high major trend reversal, which still might be forming. I mean, this was a trend line break, and we've gone sideways for a lot of bars, but we still might get something similar to that. Follow through for the bears on 2, but a big tail on the bottom. So essentially buying pressure. And again, you get buying pressure on the bottom of 3. And 3 tails on the bottom usually means what? It means that there's some sort of micro wedge forming on a lower time frame. So if you take the buy above 3, you have to realize that you're probably going to get 2 legs sideways to up. So 60% chance 2 legs sideways to up. And you get follow through on 4, but it's really not all that ideal. Low percentage chance that this is the low of the day. But again, 2 legs sideways to up likely. 4 is essentially a double bottom or a low 1 short for the bears. But, this channel is pretty steep. But again, I still think we're going to get a second leg up. And you have to keep in mind the buying from yesterday is really important. So I'm not sure how much lower we're really going to go here. Buyers below 4 during 5, and then a second leg up on 6. So 1, pullback, 2. And you have to realize that 6 might be all you get. It's 2 legs sideways to up, so technically that's enough. And then you get a giant bear surprise on bar 7. Sometimes you get surprises on bar 7. It's not, it's not unusual to get a surprise. 1 second, I'm just checking something. Okay. It's not unusual to get a surprise on bar 7. Sometimes there's some sort of news event or something like that. Maybe we get a measured move down. It's definitely a swing still below 7. I think 7 makes the market clearly always in short, so it's okay to take the short. And you know that the bulls who bought below 6 are obviously trapped. So when you see 7 closing on its low, what you should immediately be thinking is, are we going to get back to the 3 low? Are the bulls who bought below 3 and who are willing to scale in a bit lower, are they going to be able to make money? You should be thinking the bulls below 6 too. They should be trying to make money, but 3 is the closer magnet and therefore more important. So then you get 8, and it's a follow through bar for the bears, and it creates this open gap. It's essentially a low 1 sell below 8. It's an okay swing sell. It's okay to be short. It was okay to sell the close of 7, and you have confirmation on 8, so you could sell the close of 8. Same thing with 9. You could sell the close of 9, but big tails 8, big tails 9. All it's really going to take is 1 bull bar, and I think bears will give up. Why? Because, look at this. Is this really what you want to see? Is this super strong selling? Not really. It's a good bear bar, and we're in a tight bear channel for sure. But, 8 and 9 are not the ideal follow through for bar 7. It just looks like a channel. And if this is a spike and this is the channel, what usually comes after that is a trading range. So I think any bull bar and bears are going to give up and expect these bulls to make money. So if you're selling the close of 9, it's an okay thing to do, but you probably have to just get out if there's any sort of bull bar, or really any sort of disappointing bar. But instead, you get big follow through 10. A lot of traders, maybe they sell the close of 8, maybe they sell the close of 9. You see 10, you're probably going to see it as a gift. This is too steep, though. We're probably not going to get all the way down here today. Or we might go further down, but, the thing you have to keep in mind is this was really strong. This rally overall was really strong. So it's really unlikely we're just going to reverse all of that and have a big bear trend day today. Sideways to down was likely, but I thought that, this is a sell climax, and we had a sell climax essentially on the open with the gap, so we might get one more leg down. Disappointing follow through for the bears on 10 during 11. A lot of bears at this point, pretty much any bear who sold at any time has a profit, probably a pretty good one. So a lot of traders take profit on the close of 11, and that causes the bounce on bar 12. Inside bar 13, low one short, probably two legs sideways to up after 10. And you can see 14, the tail was the second leg sideways. 14 is also an inside pattern and a final flag. So II final flag, but a reasonable swing sell below since you have an open gap with the 9 low. Like I mentioned, traders who bought below 9 still trapped, and you have this open gap. So two early open gaps could be a big bear trend day. Not sure if I don't have my charts pulled up, but essentially this is too steep. Usually if you're getting open gaps this early in the day, it's not going to last all day. So II 13, 14, and then big bear surprise 15. Bears who sold below 14. I don't think they were quite able to make 10 points. Yeah, not quite able to make 10 points. At a certain point, though, I have to clear this. I did sell 14. And when you get this, it's consecutive sell climaxes. You're not quite getting 10 points, but your true risk is 0. So I think it made a lot of sense to take a lot of your profits down here since it's consecutive sell climaxes. And if 16 is a bear bar, you can just put the position back on always. 16, a bull bar closing near its high. It's a good enough bull bar that I'm expecting two legs sideways to up. And the first target is probably the low of 14. And essentially the top of the most recent sell climax. So I would say around the 13 open, something like that. But, I don't think it's all that great. It's definitely an okay buy after consecutive sell climaxes above 16. It's definitely a reasonable buy. I didn't take it today. I traded a lot in this, so I was kind of tired. But I did exit I had a bit of a short position left on the close of 16, and I exited above there. So what does that tell you? It tells you that always in bears, any bear who was always in, never really a reason to exit in here until 16. 16, they get out. So it's okay to buy above 16, expecting at least two legs sideways up. Disappointing follow through on 17, but relatively expected. Just trying to test back to the 15 close. Inside bar 18, bull bar. Kind of disappointing follow through on 19 if you bought. The thing is, if you're long above 16, you're probably not going to go straight up. You have to be realized that's probably going to be sideways to up. And then a big bull bar on 20. It's testing the top of the sell climax. It's around a 2-to-1 of your true risk, a little bit better. So I thought that, when I saw 20, I thought that if I had bought above 16, I probably would have exited most of it on the close of 20. You have a bit over 5 points, 2-to-1, probably good to go. And we're probably going to find sellers at the moving average or the 9 low. But 20 is a surprisingly strong bull bar. Follow through for the bulls 21, 22. It's, 5 straight bull bars, yes, but we're right at the 9 low. And this is where bears got trapped. So what do you think? Where bulls got trapped. So if you bought below 9 and then you saw this and then you saw this, what are you thinking? You'd be really happy to get out of break even. So I think a lot of the traders, when we get back to the 9 low, are going to sell. Same kind of thing. I thought when we got back to the 3 low, we'd find some sellers. We ended up, going right through it, which is unusual. But I thought same thing with the 6 low, probably would be some sellers. I think one of the reasons we went right through it was because we probably had to break out of the 18 bar range. We had the 3 low and the 6 low. So lots of magnets. And that was just the lowest possible one. But I thought we would find some sellers at this low, but we kind of blew right through it. But anyways, expecting sellers at the 9 low, which we get on 22. So big outside, 23. So big outside down bar. Are you selling 23? No, I don't think so. There's a lot of good bull bars here. Do you exit longs below 23? Maybe. I think it's kind of difficult. You probably don't have to, but it's just kind of a difficult spot. If you do, you probably have to find a way to get long again, 25. Essentially, if you did exit below 23 and then you got 24 and then we start to get race up on 25, you probably got to find a way to buy it back. 25, a bull bar, but 1 pullback, 2 pullback, 3. This is 3 pushes up. So I'm not sure how much higher we're going without a pullback, but something to notice is that the bears who sold above 19 are trapped. And so we have an open gap for the bulls, which is good. And this bull channel is really tight. It's tighter than you would expect for a pullback. And look at these bull bars. Closing on its high, closing on its high, closing on its high, closing near its high, closing on its high. So a lot of pretty good bull bars closing near or on their highs. a pretty tight channel. So you have to be pretty open to a potential measured move up. And we also just closed the gap with this low. So if we're closing gaps, you see we're closing this gap in a really strong manner. What do you think is going to happen next? What should your thought be? You should be thinking, well, it's probably a trading range day. And if it's a trading range day, we're probably going to close the gap at the 3 low as well. So, I personally thought that traders should be looking for a move up at this point towards the 3 low. If you bought above 24, you get disappointing follow through if you bought above 25, you get disappointing follow through on 26. So some traders might exit at the market, causing the drawdown on 27, but still probably a bit more bullish than bearish at this point. I was thinking, we might get a breakout above the wedge and just look for a bull bar to buy above 28. Bull bar closing kind of near its high, but a tail on top. It's not all that great. I think I would wait for the breakout. We do get the breakout on 29 and it fails and pulls back, but the second attempt up 30 is good. So essentially at this point, what do you have? You have a breakout above a wedge. Bulls want to measure move up of the wedge. Bears want to see the breakout fail and get a reversal down. But this bull channel is pretty tight. I thought it was more likely that we continued up. Follow through for the bulls, 31, but a doji bar, it's really not ideal. More follow through for the bulls on 32, 33, and 34. But why are we getting shrinking bodies and increasing tail size? I thought this 3 low was a really, really obvious magnet, and I was pretty convinced we were going to get there, but I was kind of confused as to why we weren't racing there. A lot of times what you'll get is you get decreasing body sizes and increasing tail sizes, and we're still, we're close to the magnet. We should get there, but the risk is kind of big and the tails are pretty big. So the probability is not all that great. So a lot of traders start taking profits, and that's what causes a bar like 35 to happen, where you get a big tail on the bottom. Because traders, they think we're going to get here. They know we're probably going to get here, but why are the tails so big? Shouldn't there, a lot of times what traders want is they want the market to race up to the magnet and then find sellers. But we don't race up to the magnet. Instead, it was kind of a slower move up to the magnet. So less likely that, or just slightly less likely we're going to go straight there. And, it's possible that since we didn't race straight there and get a vacuum test, that's why a lot of traders didn't sell. They were, interested to see if this was the magnet we were going for, or this, or the high of the day. Remember, 90% or 80% chance, no, 90% chance, that we break out of the 18 bar range every day. So you kind of have to be expecting that we're going to go above this high or below this low, either one. So what is 35 doing? Well, 35, if you think about it, it's a big pullback and it's running a lot of bull stops. Any bulls who had tight stops gets their stops run. And why are traders so willing to buy down here? Well, they still think, excuse me. They still think we're probably getting to this low. We're probably going to that magnet. And with all these straight bull bars in this really tight bull channel, what they want is better risk reward. And so as 35 is pulling back, the tail is offering better risk reward. So traders start buying at the market and they're happy to buy at the moving average after this many straight bull bars in this tight of a channel, knowing we're probably getting here. And so bulls buy and the market races up and you get a big outside up bar 35. Follow through for the bulls on 36. We're right at the magnet. So, the probability is really high, but the risk is decently big with how big the tail is on 35. Follow through for the bulls, 37 and 38, but bigger increasing tails. And you can see we're getting a breakout above the top of the wedge, essentially here on 37 and 38 towards the top of the channel. Doji bar 39. Usually a doji bar means the buy the close rally is pretty much ending. And what more do you want out of this rally if you're still long is probably something to think about. What's your goal? You're at the top of the trading range. We had really strong bear moves early in the day, so we're probably not going to just get a huge rally this afternoon. It's probably going to be a trading range, and you're getting a breakout above the top of a channel. So I don't think it's really ideal to be long after 39. A lot of traders probably start dumping longs, and that's why you start getting drawback on 40 and 41. Big tails on the bottoms of 40 and 41. So, you have to expect that there's going to be buyers below pretty much anything the first time it trades below it. And you can see bulls bought below 39. Bit disappointed in 40 and 41. So on 42, when it gets back to the 39 low, they were trying to sell out around break even. Some got filled, some didn't. Since it touched it but didn't go past it, not as many got filled. But why were the bulls disappointed? Well, if you're buying below 39, they wanted a big outside up bull bar and for a strong break above the high of the day, knowing that they probably weren't going to get it and they were going to have to scale in, which is exactly what happened. So they scale in 41, try to get out 42. 43 could be looked at as a second leg down. So 40, 41, leg one, pull back 42, second leg down 43. It's essentially a high one buy for the bulls, but it's really not that good. It's a bear bar top of the trading range. So when you get follow through 44, I would be rather suspicious of it. More follow through for the bulls on 45, but again, the top of the trading range, I don't really think this is all that great. We're probably going to find sellers if we get here. The risk or to the new high, the risk reward isn't all that great. So I wouldn't be buying up here. And then you get disappointment 46, 47. Any trader who was long disappointed 46, they might start exiting at the market, causing 47, and then 48, the biggest bear bar. But this is parabolic, right? It's essentially a channel line between 46 and 47, and a giant breakout below it on 48. And a lot of times when you get a trend, you'll get these 3-bar traps. I don't have any examples. If you have access to Al Brooks' slides online and his encyclopedia, he has a bunch of examples of this. I suppose I should make a folder. I'll do that later today. But this is essentially, you get these 3-bar traps and then a reversal. So it traps the bears into hoping that we're going to get a big move down. But the reality is the channel is really tight, so I don't think it's going to happen. Reversal up, 49, a bull bar, maybe an okay buy. But after this, hard to want to do it. You're probably going to get sideways follow through, which you do on 50 and 51. Essentially a double bottom, 51, but not all that great. Bad follow through. Failed breakout above the neckline on 52. Bear bar 53, bull bar closing near tie 54. This is just a mess. This is a tight trading range. I wouldn't trade anything in here. 57, this is the kind of trade that I used to love to take, and I was always confused as to why I would lose on it. And the reality is it's really not a very good trade. This is a really strong bull channel, and you're trading against it. It's true that this is a good bear move too, and we might get a swing down at some point, but I don't think there's any rush to get in. This is 3 pushes up. Yes, 1, pull back 2, pull back 3, but it's a decently tight bull channel and it's a tight trading range. And so I don't really think it's all that good to be taking a sell like 57 where you're selling, you're selling in a tight trading range, kind of towards the middle of a tight trading range. And you're hoping for a second leg down, but you're just pretty much ignoring how strong this is. And if you take 57 and you see 58, you just got to get out. And you can see that's what happened. Traders, any trader who sold 57 saw 58 stall at the moving average. And this is not a trade where you should have a high tolerance for, the type of follow through you get. This is a very time sensitive trade. You need big follow through 58. It's a low probability trade, so bulls are going to buy below it. And if bulls are going to buy below it, they're expecting bad follow through. And what you want is 58 to be a big bear bar that looks like 48 and trap them in. And instead, you get disappointing follow through 58, which you should be expecting. And so then you can see 59 essentially touches the break even price for the bears who sold below 57. And they start exiting, and that causes the breakout on 59. 59, you can see, breaks out above the top of the wedge, so good for the bears, or good for the bulls, hoping for, maybe this, which is what we got. Follow through for the bulls on 60, but a big tail, and more follow through for the bulls on 61. So a couple of good bars, but I question how high this is really going to go. We've already had a pretty extended rally today. And we're breaking out above the 18-bar range. You can see the bears who sold above scaled in higher, tried to make money. Not quite able to, 62 for the most part. Inside bar 63 could be a final flag. Failed breakout above 64. Some bulls will stay long. Some bulls might exit, but some will stay long. And then you get 65. And this is kind of the last chance for the bulls. This is, again, one of those areas where you're pretty high in what's probably going to be a trading range. It's a couple pushes up, 1, 2, 3, 1, 2, 3, some sort of wedge. So it's really, not all that great to be long up here. And the bulls who are long are going to have a short tolerance for how long they're, what they're willing to tolerate as a pullback. So when you get follow through, when you get a bar like 66 and you have 2 straight bear closes, a lot of bulls just dump their longs at the market, and that causes the big bear bar 67. They're hoping, they're okay with 1 bar pullback, but they're hoping for a good bull bar 66 to tell them that we're probably still going higher. But they get a doji 67, and so bears dump or bulls dump their longs, and that causes the big bear bar 68. Follow through for the bulls 69, but big tails on both sides. Still okay to sell to close though. Probably sell to close 67 for a swing, and follow through 68, 69, and then why does 70 reverse up so sharply? Well, it's because sell to close bears 48. Disappointed in this. Let's drink a sip of water. Sell the closed bears disappointed in this are probably going to be eager to get out of their longs or get out of their shorts. And bears know this. When you see 67, traders will sell it betting on a trading range and betting we're going to get back to the 48 low. I don't think it's the worst trade in the world. I don't think it's super high probability, but traders will take the sell. 60 and then 70, a big reversal up, pretty much making the bears, eager to get out. We tried to trade back down towards the 69 low. Maybe if you sold So if you sold 69 and then you sold more on the close of 70, you can see those traders were just barely able to get out at break even. And the moment they were able to, they bought back the shorts in a hurry, and that caused the rally on 71. It's right on the moving average, so not that great, but we do have an open gap here, 66. So maybe we are going to have to fill this gap. And you can see we fill the gap and then get a big reversal down and 2 legs down at the end of the day. You could argue 1, 2, and maybe we get 3 tomorrow if we get a gap down. We might have to test back up to this 73 close. It was a reasonable buy. It wasn't a great buy because you're high on a trading range, but it was theoretically reasonable, even though it was big up, big down. But it was theoretically reasonable to buy the close of 63. So I think we might have to get back to the 73 close. Or sorry, reasonable to buy the close of 73. So we might have to get back to the 73 close at some point tomorrow. Reasonable entries today were kind of a lot of them. You could have sold the close, sold below 7, sold the close 8, 9, maybe 10, but it's climactic. You're probably going to get 2 legs sideways to up, which we did. Good sell below 14, follow through 15. Good buy above 16. You could probably buy the close 20, but I think kind of hard to want to do, but pretty good bull bar. Maybe okay to buy above 25, but third push up. So maybe not all that great. Definitely okay to buy 30, buy the close anywhere here. And then climactic breakout. Maybe, 50, 59, maybe back to always in long. And then you could probably sell 67, but I just think after this many pushes up, or after, this strong of a bull move, it's kind of sketchy to do. But it is 3 pushes up, and this was a strong move early in the day. So the bears have showed signs of strength today. So it's probably an okay swing sell 67. And I probably wouldn't touch any of this. I would just be done. On the daily chart, we get something disappointing for the bulls, kind of like expected. It's an inside bar, so maybe some sort of wedge up, but a bad signal bar. Tomorrow, I'm just expecting sideways, probably sellers above, probably buyers not far below. So I wouldn't be expecting, I would just go into tomorrow really expecting a trading range day. And yeah, that's the day.